Hi, I'm Peter Rose, founder of Longwood Currency Trading. What does the Forex chart really tell me? You know, I was originally going to call this, what does the Forex chart really tell us, or what does it really tell you? I don't know what. I don't want to speak for you. I can only speak for me. And this whole video channel is about my thoughts on Forex trading, not what your thoughts should be. That's because the Forex market and any trading market, there's no secret sauce thing that says if you want to get from point A to point B, this is the only way to get there. There's many different ways to get there. So how do you solve the problem? You have to be knowledgeable about what the market is, knowledgeable about trading, so that whatever path you find yourself on, that's a correct path. As long as you can see the future winding probabilistically in that direction, then you take that way. But it isn't just looking at one path, it's looking at all of the paths. That's what a PERT diagram in project planning does, right? It says, well, if I want to move my office, okay, so here's the happy path. I'm going to pack the boxes, load them in the truck, go to the new office, and unload them. And it takes a certain amount of time. Well, what happens if the truck breaks down along the way? Well, then you have another path, right? And you say, well, the truck, I load the boxes, I drive the truck, but the truck has an accident or something, breaks down, I got to fix that. That takes a certain amount of time. That's going to slow that path down than the other one. So there's a lot of different paths. The truck's still going to get there. You're going to still move the office. It's just that something happened along the way to interrupt that. So you get into a trade, which doesn't really mean anything because you're going to make many trades. I do probably 600 or 700 transactions a year. Now, how many full positions those are is probably 400 or something like that. Because maybe I'm staging in. There's a difference between making a trade and having a position that you're adding trades to, right? So having a trade is something you do, and having a position is something that you have. Okay, so what's that got to do with what the Forex chart is telling me, telling you, telling us? In my view, it doesn't tell us anything. It tells us what happened in the past. You know, I took my dog for a walk and he peed in the woods. I get a picture of that, and that's what happened in the past. How does that help me today? Well, it tells me that if I walk the dog over to that place, maybe he'll pee there because he liked it. I don't know. But maybe he doesn't like it. Maybe that's just was a random thing. So if I constantly take the dog over there, maybe he's going to say, well, I already peed here. I got to go pee somewhere else. You don't know. The chart is the same way. Just because you've got a line on the chart that had many structural touches to it doesn't mean anything. It means that 4 times in the past, price got to that point and bounced off of it. What good does that do you? Do me? Well, it's part of looking at those probabilistic paths of trying to get my position from point A, which we'll call it is an entry point, to the profit target, point B. There's a lot of different ways it can go there. It could go up for a while, it could come back down, it could come way back down, it could go way, 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 way up and almost get there and come back down a little bit and then go back up, or it could go way up and then come way back down and just keep right on going down. See all the different ways? So you can't just ignore one. You can't fall in love with your position. So you can't make what I call anticipatory trades, meaning, oh, I think price is going to go up, and so it's down right now, and it's going to turn around here. So it hasn't turned around yet, but I know it's going to turn around and go up there because it's Tuesday and whatever. So I enter the trade. That's anticipating that the price is going to do something. 9 times out of 10, when you do that, it doesn't work. So you don't do anticipatory trades. And you can't just look at one probabilistic path in your trade. That's why we trail stops or break positions up into many different trades, and then you get involved in all the complexity of of those processes. So what does the Forex chart really tell you? It tells you what happened in the past, and if you know how to look at it, it gives you a probabilistic view of what might happen in the most likely scenario. So those two touches on the line, you look at those and say, does that really form an important level? No. Not on a 5-minute chart, not on a weekly chart. What difference does it make? Because it's not what we call a strong confirmation. Well, what if it's hit 7 times in a row? Then that's a pretty strong level. It is a strong level. But because it's hit there so many times, maybe it's time for the price to break through. So at some point on that spectrum of not having enough points and having too many points, what do? You make a probabilistic estimation as to the strength of that, let's call it a resistance zone on a long position, and your estimated probability that your particular view of price action at that time has price action having enough momentum to go through that point, or to just reach it and maybe not have quite enough momentum to go through it, and it'll be another retracement from that point. Do you want to be doing that sort of thing in real time? That will be real-time trading, and really what trading is all about is a real-time thing. It's what's price doing right now. Yeah, I want it to go up. I'm looking at price and it looks like it's going to go up, and so I should go in. Do I care that over the last 60 days price has never got to that point before? Price is going in the opposite direction. What do I care? Well, if I'm a long-term position trader, well, I could probably care then. But if we're day trading, which I think we should be in currencies, I don't think we should be taking long-term position trades in currencies. I don't think that's practical. And even if you win, you have to be really, really, really skilled and have a lot of money behind you, because of the retracement that price travels in. You get these ranges that price goes in. Those ranges are created by the purpose of the currency market, which is international commerce between different countries. And so price is never going to go all the way up like price might go up on a stock in the stock market. You're not going to get constant. You can't say, General Motors stock has a PE ratio and it's gone up consistently over the last 22 years. Because real estate is going to go up, and over the long term you're going to get 5% if you're in the heartland. You might get 8% if you're on the coast. Those things are continuing. They're getting better. When you look at the short term, what factor does that really play on a daily? If you do short term, meaning you're a day trader or you're a scalper, particularly a scalper, what do you care? Price has gone down for the last 16 days and it's going up right now. What are you going to do? Take a short? No, if you're a scalper, you're taking 10, 15, 20 trades a day. The mantra there is trade small and trade often. And cumulatively, if you're a good trader, then you'll make your 10 pips for the day or 20 pips or whatever you're going to do. Because at some point as a scalper, you have to be flexible enough to say, whoa, wait a minute, this has got a lot of juice. Instead of grabbing 3 pips, why don't I just sit here and see what happens? I've already got my 3 pips. I can pull the button and close out at the 3 pips. So I'll just see it. Maybe I'll get 5 pips. Maybe I'll get 50 pips. But you're constantly doing that anyway. And as I said earlier, do you want to be making those decisions in real time? In what I do is I have taken the very complex market and created what I call the life cycle of a currency position. I was a software engineer for 33 years, and we used what was called the software development life cycle, the SDLC. I say this all the time. but it forms a base for those of you that haven't gone back in my catalog of 450 some odd videos that I've done so far, where I'm looking at the currency market and mapping those skills from the software development lifecycle down into the currency market. To how do you solve that problem? It's the life cycle of a currency position, entry analysis, position management, and exit methodology. That's all you need to know. 3 simple problems. Each problem has conditions that give you that okay or no okay signal that you're satisfied that particular condition. When you are actually trading, you're not looking at your checklist and seeing what's going on. That has to be part of your DNA at that point, where you're not really trading in real time because you have these rules that are behind you that dictate what your actions are. Well, I guess you are trading. You're making trades in real time, but your decision process has already been made up. It's like an airline pilot who's flying the plane along, and he doesn't get paid for that because anybody can fly the plane. He gets paid for landing it and for taking off. You get paid for placing the trade and exiting at the right time. You don't get paid for position management, other than the result of your position management may lead to a more successful trade. But those rules that are embodied in entry analysis, position management, and exit methodology are not being figured out in real time. They exist as the basis of what you're going to do. And what is it that you're going to do? As a retail trader, you're going to be interacting with the Forex charts on the time frame that you're trading on. And you're applying those rules. Not figuring out what to do in real time, but applying the rules in real time. And there's a big difference to that. And that's how I use the charts. I don't know what you use them for, but if you're using them as predictive tools and the price is going to go here and I got a Bollinger Band and I got all that stuff, that's all voodoo. I've got a bachelor's degree in physics, almost a minor in math. I did 33 years as a software engineer. I understand this stuff, and there is no correlation between that stuff. Price acts, and magically it fits the Bollinger Band. I don't know what to tell you. But if you're waiting for the Bollinger Band to tell you what to do, that's where you're getting into trouble. And that's where you're using the charts incorrectly. Well, maybe you're using them and for some reason things line up for you and you think that the Fibonacci's are valid and you make that work. But it's not the Fibonacci's. It's your ability to trade and your experience that do all of this stuff first and then confirmed with the fib. That's fine. What do you need the fib for? That's my position. Remember, the fib is being put on a chart. So what does the Forex chart really tell me? It tells me what I should be doing when I'm trading, not what the friggin' Fibonacci's or the Bollinger Bands or the RSI's or any of that crap are doing. I might look at a moving average, which is a prolonged statement of what happened in the past, with a lag factor of the period of that moving average. If you don't understand that, then you really don't get moving averages. You think that a moving average point where it is valid. It isn't. That doesn't mean anything. Anyway, I digress. What does a Forex chart really tell me? It tells me how I should implement and when I should implement the rules that I've already predetermined. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.